What is up, you guys? So in this video, I just want to kind of continue and kind of add a little bit to the last video that I made a few days ago, comparing this to the previous bear market of 2013, 14, 15-ish, going all the way to pretty much the end of 2015. Three things that I really talked about in that were major symmetries between the drops to different supports as well as the time frames, because the time frames were very significant, very accurate. And I don't know if anybody else has really talked about that. It came to my attention after posting that video. Somebody said, I got like one or two comments about Crypto Crew University Steve. So I checked out his videos, and I actually like his videos a lot. I think he's pretty accurate. If you can get past the first few minutes of him like selling you a course or whatever, his actual technical analysis I think is really good. The reason I think it's good is because I think it's simple, and I think that's one of like his catchphrases or whatever. Like, you keep it simple or something like that. And I agree with that. I definitely do. I definitely think that technical analysis can be muddled up, and it is very simple. I think if you use certain indicators and certain references often, they are pretty reliable. Again, knowing where to attribute which indicator to which time frame and everything, I think is the more complicated thing. But pretty much, I think some of the most important things are volume, definitely, probably the best indicator long term. Maybe not necessarily on like the 4 hour, 1 hour, or like short term trades, potentially, but I think volume is a really, really good indicator for long term, especially indicating bottoms and reversals, and really just simple support lines and everything like that. And really, I think it is important to use that previous data. So this is the last bear market. And I'm using Bitfinex, and that's basically as far back as it goes on this chart I have pulled up on here in TradingView. It goes all the way back to April of 2013. So yeah, I do want to expand on what I talked about in the last video. I want to explain what these boxes are. I want to explain some things. And also I want to explain why, not necessarily, why we don't have to follow that previous bear market exactly. So far we have, and I made a case for that a couple of days ago, kind of with the drops, literally how long it took from the first time it touched the first support of 6K to the first time it dropped below that and really dropped below that. Again, if we zoom in, you can see it clearly did drop below right here, here. But I mean, those aren't really, they weren't sustained at all. They were just candles, they were just wicks of the candles that extended down and immediately bounced back up. So I would not really call that breaking support. Again, none of these are always exact, but you can see this clearly didn't break it in the long-term trend. You wouldn't really consider this breaking 6K. You would, however, without a doubt, you would consider this breaking 6K. This is what we mean if you say, like, we really broke support. This is what's considered breaking support. Again, these, not really. So I want to explain that. I mean, really, up to within, like, a few days from the first time it touched here to here was identical, the time frame to when we first touched back here. So from the first time that it touched on that support to when it actually broke and had to find that next level of support was right around 275 days. Now, if we want to do the same thing and go over to this one, again, this is what I did in the last video, but I just want to do it really quickly here, again, so you can see what I'm talking about. Here to the first time it broke, 280. So, again, I'm very far zoomed out, so I'm sure I could get like a day or two difference here, but really within 270, 280, both of those are incredibly close to each other. So I find that interesting, and so I just wanted to expand on that. But really the point of the video, to go over why I don't think necessarily we have to be in the bear market as long as what I have charted down on here and what these boxes mean as well. I want to go over a few other things in this video as well. But before we get into it, really, I think the point of doing technical analysis and looking at price on YouTube is very simple. Even just charting on Twitter, no matter where it is, I think it boils down to one thing. And I think it boils down to people speculating on where the bottom is, when the bearish pattern could reverse, because I don't think you will ever see a bearish pattern reverse directly into a bull market. I don't think you'll ever see a bear market just change into a bull market overnight. I don't think we'll see anything like this, because that's kind of like, that's a really bad drawing, but that's basically the idea that I'm trying to get across. You'll never really see that, but more realistically, it would probably be something more like that. You probably won't really see things like that. What you would normally see is a leveling out period in between a bear market and a bull market. Kind of as an example, in a song, you never go from chorus to chorus. You always have bridges in between. So think of it that way. You have a bear market. You need something in between to connect the bear market to the bull market. And that basically is like a leveling out period after finding a bottom or something like that. So just a little analogy that I think you can probably find hundreds of them. So again, I think it boils down to that people come on and look at these videos because they want to get perspectives. They want to see other people's ideas of where a bottom could be. I think that's what literally 99.9, if not 100% of people in crypto, that's a question that they would love to have an answer to, is when the bottom. Yeah, actually, I would go as far as saying that 100% of people in crypto do want to know where the bottom is. They want to know when we're going to reverse into a bull market. And really that boils down to kind of entertainment. It's speculation, and that's why this is valuable. That's why this is useful. The goal of these videos isn't to predict exactly like where the bottom is, although that is definitely something that I do enjoy speculating, and that's included in these videos. One thing I'm not going to do is throw out 10 predictions per video every single day, and then when one of them comes true, I'm going to point back to that and say, hey, look, I predicted this right, and disregard the other nine times that they weren't accurate. So yeah, again, just to point it out, basically this is to speculate based on actual data and actual things we have in front of us, and to try and get an idea of where we could see a bottom, because I mean, really, that's what it boils down to. That's what people care about. That's what I care about, and I know for a fact that's what everybody cares about. You know, people want to know when the bottom is. People want to know when the bear market could reverse to a bull market. So, without further ado, so the 270, 280 roughly days that this bear market, the previous one, spent above that first support there, very similar. That was around $430. Again, 6,000 right here. So we broke that, and now we're in this other range. And so I just drew this box here to exactly replicate the amount of time as well as the percentage drop that we were in that second one. So you can see here, this is that right here. This length right here is exactly the same as the box that I drew here. And then that third support right here, with the support being 170, that's where I drew the third box here. So that's where this is. So what does that naturally mean just by looking at that? What does that imply? Which I want to say is not what I'm implying, and that's kind of the point of me making this video, is that we will be in this bear market until the end of 2019. And I'm saying that that is not necessarily the case. The point of me coming on and saying this is that even though I have these boxes drawn in here, that doesn't necessarily at all mean that I'm saying we're going to be in a bear market until the end of 2019. The point of me having these boxes here is to give a comparison so far of the market that we've seen in comparison to the previous bear market. So with that being said, do I think it's possible that we could trade in this box right here for roughly 3 more months? I do think it's possible. And what would that mean? Between $4,000 and $6,000 for the next 3 months. Again, yes, I definitely think that's a possibility. Do I think it's possible that we'll trade in between $3,000 and $4,000 for roughly the next 10 months? Yes, I tend to definitely not. I mean, if anything, I tend to disagree with this the most in terms of where we are in the actual market. And that kind of takes us back to some key points of like just kind of the fundamentals of where we are in cryptocurrency. If we go back to this period right here, I was not involved in cryptocurrency back here. However, I think it goes without saying that there was not as much going on in the space back here as there was here. For example, the bottoms, the lows of that market, I mean, really, there was a low, it wicked all the way down to like $100 Bitcoin, $100 Bitcoin. So asking that question, how many of you would be scooping up and just taking a ton of money from wherever you could find it to buy Bitcoin if it went all the way down to $100? I think many of you probably. Even people that have left the market now, non-believers, I think if Bitcoin went to $100, people would definitely want to scoop that up. I think people would see that as a major opportunity. I think we would see YouTube videos just plastered all across YouTube being like, ultimate opportunity, $100 Bitcoin. You have to, you'd be silly not to buy this or something like that. So back then, not only was the price a lot lower than it is now, the fundamentals and the space itself was a lot less, how do I want to word this? Maybe quote unquote guaranteed. We didn't know how robust it was. We didn't know a lot about it. But now we have a lot more data. We had a nice run for the past few years. We obviously had the euphoria of 2017, which piqued so many people's interest. So many people, more than ever in history, found out about Bitcoin, invested. And, along with that, since then have lost value in their investments, especially if you're investing essentially anywhere above where we are right now. So pretty much any time after August of 2017. However, again, The point of saying this as well is that we're in a much different space. There's so much better technology and so much more reason to be invested fundamentally as opposed to back then. Again, we're kind of shifting from speculation to real use. It's a slow shift. There's a lot that needs to happen, but it is happening. I mean, that's really that's what matters, that it is happening. Something else as well I wanted to point out real quick, I wanted to throw in here. One of the reasons that I drew the percentages from kind of in between the top here to this channel right here, so like roughly right here to get this 60% drop, is because I drew it there because, it's not necessarily cherry picking. I covered this in the last video, but one thing for sure, I just wanted to point this out because it's something that I guess didn't cover as much as I wanted to in the last video. This channel is something we've been trading in. You can see, touched it here, beginning of March, pretty much here, beginning of May, 2 months later, end of July, multiple times here, right? Never once did we really bounce from 6K to 17 and then from 6K to 15. So that's not really the channel. This isn't a channel that's been trading at all. So I don't think that's valid. And so that's why I drew that there, and that's why I measured from there. Now, if we go back to the last bear market, I can't say the same. This channel actually was being traded in. It did bounce from 430 up to 700. It did bounce from 430 up to 600. It did bounce within this channel here. You can see even here, bounced from roughly like 430-ish, all the way back up to over 1,000 here. So that channel does exist. That was like a legitimate thing. For whatever reason, that's not what we've seen here. We haven't bounced all the way up into a channel above here. So again, that's just why I've drawn within that, and I think that makes it valid there as well. Again, that's why we see a 60% drop from here, then another additional roughly 11, and then an additional roughly 10 down to here. And we saw the exact same thing in the last bear market. So again, one of the reasons that I do believe that this channel might not exist or be as concrete as the last one is just because the space, at some point the fundamentals do have to play a role, I believe. So far, they haven't very much, especially in the prices of Bitcoin. We've gone through the entire year of 2018 almost without news really affecting the pattern that we've been in. At some point, it will. I think it could play a very good role in getting Bitcoin and cryptocurrencies back out of such a pattern. Whether it's backed, which I think is the major thing people are pointing to at this point, less so probably an ETF. 100% I think the previous bear market was solely based on speculation, as to now, which there's much more technology, much more adoption, and much more. I think people are just very confident in crypto in general. And that's a trend I think that's going to continue. And I know you hear this a lot, but to be frank, if we would trade in here, potentially if we would even go below this. And the reason, again, I drew 2000, it did act as support and resistance, this range here. This was a channel that we traded in between May of 2017 to July of 2017, so roughly 2 months we found support there as we were making our way up. So I think 2000 could be valid support as well. A lot of people pointing to, if we just zoom out and look at a big picture here, I'll just throw this on there. And that is 1,152, which was the very top of the last bull run, dating all the way back to December of 2013. Again, it did provide resistance as it was trying to exit there for multiple months until it did. And then as soon as it did, it exploded essentially. Went straight from 1,100 all the way up to 3,000 again, which is a reason I think 3,000 is a really good support there. It was the first major resistance after exiting those previous all-time highs and just exploding almost completely vertically up there. The next most vertical move obviously was probably towards the third quarter of 2017, and then ultimately the very end of 2017 where it absolutely exploded. So 1,100 would represent a roughly 94% drop from all-time highs. That's not really a spot that I think is super valid in terms of where we could find a bottom. Based though on everything we've seen, I wouldn't count it out. But if I would have to speculate on where the true bottom would be, I think it would be more roughly around 3,000. And again, we could even see prices dip slightly below that, whether it's wicks or just small periods of times where it does. I think that's probably going to be the ultimate bottom there. And again, I don't necessarily think it will be this long. I don't think that these things ever are perfect. So I don't think that like you can just copy and paste, oh, this was this many days, boom. This was this many days, boom. So Bitcoin's going to start its bull run on December 21st, 2019. I don't think that's the case. But I did make that last video, and the reason I'm kind of covering it in part in this as well is because there are a lot of consistencies there that it's been copying the last bear market in a lot of different ways. But as well, I just want to zoom in here on the 4 hour. This isn't something I like doing as much. I think it's much more valuable, much more entertaining as well to kind of just look at the big picture. But I just wanted to look at this really quickly and kind of get your guys' opinions here. So the move that we're in right now on the 4 hour, we could look this up as well. This is not really so far what you would classically consider, I guess, a rising wedge, although I do think it could turn into that. And one of the reasons why, so a rising wedge typically forms during a reaction rally following a significant downtrend. And that is definitely what we've seen. We've had a very significant downtrend, and this could essentially be a reaction rally. So essentially this would look more like this. So we would most likely see higher highs in here before falling even further, because this is usually a very bearish pattern, and I want to compare that to something that's a more bullish pattern that so far we've kind of seen. However, we would need to see a lot more upside in the short term, which is very possible considering how much of a drop we've seen recently. There's plenty of room on all the indicators for the price to go up in the short term. But again, that's typically more of a bearish pattern. And the other thing I wanted to just cover, a rising wedge, which we haven't necessarily seen, the support has to be going up much more exponentially than the resistance, which again could actually be the case. It would look more something like this, a rising wedge. Again, that's kind of a bearish pattern. And that is opposed to an ascending triangle, which you see right here, the resistance is horizontal and the support kind of bottlenecks up like this. And technically so far, that kind of is what we're seeing. And again, that's more of a bullish pattern. I don't necessarily think that's what we're seeing here, but it is possible, especially in the short term, which is why we're looking on the 4 hour, because this is definitely a short term move. I definitely think that could be possible. And we could even just see a breakup shortly just because of all the downside we've seen recently. I think that's just, it makes sense. It makes sense that we'd have a nice breakup in the short term because we've seen so much downside. I don't think we'll ever see anything like this where the market just goes down and down and down and down. That's not really how it works. I think you guys all know that, but I just wanted to point that out. So I guess I'm leaning more towards maybe like a rising wedge, but again, that's more of a bearish pattern. So I guess it's between those two kind of things right now. Let me know your thoughts in the comments if you agree, disagree, or have other options or other opinions on the 4 hour or just on the shorter time frame on what pattern seems to be forming. Again, it's of less interest to me than looking at this kind of macro long-term daily scale. But yeah, let me know your thoughts in the comments. Thanks for watching, guys. If you're new to the channel, make sure to leave a like and subscribe, and I'll see you in the next video.